Hi, my name is Dave Miles. I'm a certified public accountant, certified valuation analyst, and a chartered global management accountant. I've been at ValuSource for the last 15 years as their CPA on staff in their valuation area. Today, thanks for joining us. I want to talk about how the software can be used and the best way to get up to speed on that software as fast as possible. So let's get started.
The first thing you're going to want to do after you install the software is run it. There is a trick to this, however. If you highlight the icon and right-click it, you can choose the Run as Administrator function. After the right-click, the User Account Control System brings up a message box that says, do you want to allow this executable to have access to the system files? And when you press yes on that, which the Pro program needs access to that, you'll get the splash screen. Up on top here, you get to choose whichever software products you want to launch. In this case here, I'm choosing Business Valuation Manager Pro. It will open in the background. You need to have a login and a passcode to access the software. That's how we work the licenses. The basic premise is up on top is a window pane that allows you to run the different pieces of the software. In the far left corner, there's two icons that will save everything that's open. There is a snap to, and it will help you, when you get confused, bring everything to the forefront. We have 5 icons coming across the top here. There is the home icon, the analysis icon, the databases icon, the report icon, and the workbooks. What these icons do is they bring up the workspace that we need to use. In this case here, we're on the home icon, and it's going to say, do you want to bring open a report? Or down here in the bottom, do you want to watch further help? I'm going to click on the analysis file that I want to use today, and that's going to bring me over to the analysis. The analysis working space is basically saying, how do I use Microsoft Excel? What I like to tell people about our Pro product is, we try to put code around Microsoft Excel and Microsoft Word to make it easier to use than the Office product itself. And so the analysis space is basically a worksheet with a whole bunch of different workbooks inside of it. We have a navigator pane on the left-hand side. We have a working pane over here on the right-hand side. We have taskbar buttons that will affect whatever is showing in the working pane here. And then we have some menu items. So to navigate around the workbook, you just click on a particular node. You can tell those are spreadsheet nodes, there's a chart node, there's an assumption node. Assumptions are just things that you choose to make the project go easier, and so that you have a linear line of logic. You know, you choose an after-tax cash flow. What does that represent inside the discount rate? What I want to talk to you about first is how we set up our how we work around the workbook sheets. We have white background cells. White background cells are where we don't know what's going on. You have to give us the information. In this case here, it's the name of the corporation, and you can type in whatever that is. It might be the income statement, might be the balance sheet, might be your proxy for a discount rate. We have blue font cells where we go out and we try to map to a data piece, or where we are calculating something. If you don't like what's in a particular blue font cell, you can type in the word child's here. In this case here, it was a small report name. Sometimes in the report writer, you like to say, what we want to do is give it a short name so that we can move on with that. In this case here, I typed in child's. If I type over a blue font cell and I want to bring back what was originally there, there's an icon up on top of here, bring back the function, or I can go to Tools, Restore. And that's going to say, do I want to bring back that cell? It's going to ask me to choose a template, and in this case here, I press OK, and it should come up and say we might have some range names, and then it will bring back the formula that was inside of there. And you can tell up here that we now have a formula that was up there. If we don't, the black font cells are where we actually have the, I'm typing into the keyboard now and it's saying that it's protected. So inside of our framework, we have all of this protection for the black font cells. What that means is that if you're trying to change a formula or you're trying to change some labels, you can do that by going out to native Excel, but it's not going to be easy to change. It's going to have to be based off of the fact pattern. When I click on the green X, I can go out to Microsoft Excel. Inside of Excel, I can change anything I want to change. Instead of corporation name, let me type in business name here. If I don't like our fonts, I can come over here and change the fonts. And what I'm trying to prove to you at this point here is that if I change something inside of the Excel sheet, it should stick for that particular project. Some people like to have dollar signs on the top rows and bottom rows, for instance. Some people want to have Arial instead of this new, instead of Tahoma. We don't delete out things. There's over 10,000 formulas inside of this book, and we don't delete out anything. What we do is we hide stuff, and we use the pre-display functionality, which are these purple rows. If I put a 0 at the head of the column or at the head of the row, in other words, this case here, I'm taking out city, state, and valuation date, those rows are going to change to 0 and be hidden. I could do the same thing up on top here by changing any of the columns to zeros as well. I want you to take notice that there is no information up here in the first 10 rows, and there's not a lot of information over here in the first 10 columns, although there is some stuff over here. I will make mention of this back when we get to the financial statements. When I'm out in Excel, there are several different things that I can use on the icons here. If I drop the sheet down, Show All Cells is going to show all of the cells. The headers are the ABCs and the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And then if I want to display this, like I said, we hid these particular rows. If I want to display this and see what it's going to look like when I come back into the program, I can show that. The workbook does the same thing, except that it affects every sheet inside of the workbook. When I get done editing inside of Excel, I press return. That brings me back into the framework, and you can tell that my font change is stuck. I don't see the new information down here that I put in, and if I were to insert a new row, I could see that new row down below inside of there. The other thing that we need to talk about here before we start actually getting into the usage of the program is how to print and set things up. If I drop the analysis menu down, I can go into page setup, and inside of the page setup I can set my headers and footers, and we use tokens inside of the headers. What that means is that we're going to go out and pick up the range name and call it company name, and then you get to choose whether you want to call it an exhibit or a schedule, and there's a number that goes in there. The sheet name is going to be the title up on top here, but you can change all of that if you want to. You can also change the sheet over here. We have all of our stuff being printed out in black and white. If you want to change that so that it's in color and you can get out color graphs, that's how you would change that. Sometimes people like to go to the page and set up the scaling so that it fits one page tall. In any case, after you set up all of that information, you can now go to the analysis, page setup, and this time choose multiple sheets. In this case here, we're going to take the settings that we had on business profile, and we can check mark all of the items that we want to copy. If we don't want to copy the headers and footers, we would uncheck mark that. And then you have the choice here. You can check mark a particular schedule, or you can choose all of them. And then when I press the copy settings, it will copy that header and footer down. Likewise, printing. I come over here to the print. I can print a current sheet, in which case it's going to say, give me a page number and a sheet number. And then when I press OK, it's going to bring up my print driver, and it's going to say, how do I want to print this? Now, don't print from the print preview. We have to replace those tokens. So if you're seeing at company name, at sheet exhibit, it's because you're printing from the print preview here instead of letting the program go through and replace those tokens. In this case here, I'm going to press cancel. And if I go to analysis, print multiple sheets, I can come down here and I can check mark which particular sheets I want to use. And then I can say, okay, give me a page number and a sheet number to start with, and press OK, and I will get out a batch of schedules. So I can print those out into a PDF printer or off of the desktop printer that I'm using. The other thing I should talk about is Tools Options. Tools Options set up how new projects are created. On the analysis sheet, and that's what I'm under here, the analysis, I can choose chronological years or reverse chronological years. Chronological years are set here because we had a lot of accountants want to say, I want to go from left to right, and as I move across the page, things get bigger. They like to see that particular format. There's reverse chronological in here, 9876. And that's because there's a school of thought out there that says the most important information should be the first piece of information read. And so there's reverse chronological in here. Once you set this up, it will create new projects in that order. You cannot flip back and forth in the middle of a project from chronological to reverse chronological. The other thing that you can set up here are your file locations. Now, I recommend that you install the program locally on a hard drive and that you set your file locations to be the server drive where everything is being backed up. In the report, you can set up how your links are going to be made. You can play with those a little bit, but I wanted to show you how and you can set the locations on the workbooks, and we'll talk about those tabs a little bit later. But I wanted to show you how the tools options work so that you can get in there and do that. The next step that we want to talk about are the project assumptions. Typically, when we start a project, the very first thing that we're going to use is the project assumptions. And it's on top, and it will represent, or it will affect, everything that's down below it. In this case here, we can choose corporation or partnership. It will affect the balance sheet and how that's presented. We don't have LLCs or S corporations on here, but we do have the ability to say don't pass through the taxes. The first fiscal period ends and the last fiscal period ends. I'm going to come back to in a moment. And the other one that I want to talk to you about is this value calculation. We have this enterprise inside of here. When we built the program, we were working with a mergers and acquisitions firm, and they said, yes, we can use your program, but we don't think of things the same way an appraiser would think of things. We want to use benefit streams like EBIT, EBITDA cash flow, but we also want to have cash-free, debt-free, and we don't think in terms of building up a discount rate. We think in terms of multiples, 7 times EBITDA, 5 times EBITDA. And so if you're a mergers and acquisitions person, check out the enterprise. If not, always choose equity. Even if you're calculating an MVIC value, you would, on your conclusions page, go in and insert some rows and say, I'm going to add back my debt to get to a market value of invested capital base. The other thing that I tend to recommend is that you choose the premiums and discounts to go to the appraisal methods. That's probably the most theoretically correct. However, if you have the presentation and you need to have your premiums and discounts go at the very end, and that makes sense in your particular case, then conclusion of value is a possibility. We had a lot of our clients want to use that, so we inserted that. But in the beginning stages, I would probably say, let me apply those to the appraisal methods. Now, I said I was going to come back to the fiscal periods. Inside of here, the first fiscal period ends is a 12-month period, and that's the ending date of the first fiscal period. So, we have 10 columns of data that are available inside of the software here, and this would be the very first one, and it will open up columns that are older, up to 10 periods. The last fiscal period ends can be a stub period. We don't handle stub periods in the middle. Say, for instance, a company changes its tax year in the middle of the process. We don't handle a stub period at the middle of the year. We also don't handle a stub period on the very first one. Company comes into existence in June, chooses December 31st for its fiscal year end date. We don't handle that first 6-month period. You'll have to do that outside of the program. But the last one, a lot of times we'll say, okay, we have data up through December 31st, 2014, But now all of a sudden June 30th, 2015 rolls around and they give you information for that. You can choose that to be June 30th, 2015. So we handle stub periods at the end, but not in the middle. Now let me show you what those two items are going to do over here on the financial statements. So in this case here, I want you to notice we have $4.5 million, and the date up here is December 31st, 2012. This is the 10th column of data, and it's not going to change. But if I come back to the project assumptions and I change this to December 31st, 2013, when I go back to the income statement, you can see what happened here is that the date changed up on top to December 31st, 2014 instead of December 31st, 2013. We also opened up two periods back here because of the number of the beginning date wasn't changed basically. And so we can have up to 10 columns of data. Now if we want to move this $4.5 million from the 10th column to the 9th column and also change our dates up on top, we go back to the project assumptions, and there's an item up here called Add Fiscal Period. So when I click on the Add Fiscal Period, it's going to change the last date to December 31st, 2015 here, and it's going to copy information in the 10th column over to the 9th column, information in the 9th column over to the 8th column, and it's going to open up a spot there. Why would we want to do this? Well, let's say we have a recurring engagement. We do an ESOP every single year, and so we want to add that period. Let's say we're in litigation and it extends on us a little bit, and just like I said before, now we have information up through June 30th, and we need to have another column of data out there. So when I come over here to the historic income statement, you can tell that I now have a period on the front that I can input information into, and so the 9th column now houses the $4.5 million, and my label up on top is correct. If I want to remove that period, let's say I made a mistake, I can come over to the edit menu and say remove fiscal period, and it should do the exact opposite. It should move the $4.5 million over to the 10th column and move the label of December 31st, 2014 over the top of that as well. We'll give it just a second here to run its course. What's going on in the background is that it's affecting an awful lot of sheets, and so we have to make sure that we get things copied correctly. Now I have two blank columns out here. I don't want to go through the rest of the presentation with those blank columns. So let me come over here and move that period up. So here we go. In my working pane, I now have all of this information. Now you notice that we have min, max, mean, median. This here is to help you analyze the financial statements and the schedule that you're on. There are taskbar buttons up on top. If you don't want to see that information, or you don't want to present that information, say in a report, you can click on the Analyze button and it will hide that information. So now I'm just seeing the financial statements themselves. And since we're on the financial statements, let's talk about how to customize those. We have 4 taskbar buttons up on top here: Insert, Move, Delete, and Edit Account. So what happens inside of our workbook is that we have an awful lot of sheets that look the same as the income statement. And so if I want to insert an account under cost of goods sold, I click on Insert. And it's going to say, do I want an account? Do I want a sub-account? Above, below? I'm just going to leave it at New Account. The important tip here is that you have to select the property that you want. If it's a cash expense, you want to choose None. If it's depreciation or interest, you want to make sure that those are selected. One of the top questions I get is when I'm back in the income models, how come my non-cash items are not coming through in the same amount? And it's because the property wasn't set up correctly. When I press OK, it will go through and it will insert an account, not only on the income statement, but on every single page that looks like the income statement. So for instance, when I come over here to the adjustments, the new account is inserted on the adjustments. When I go into the adjusted income statement, I have a new account asserted there. When I am analyzing this and I want to say what's the common size income statement, that new account is now added in there. So in the background, I'm adding all of these accounts on all of these different sheets, and I'm automating that process to make me more productive. Now, these other accounts over here, if I don't want a particular account, let's say COGS depreciation, I can hit delete and it will delete that out. Now when I insert accounts, it's going to pick up the properties of the account above it. So sometimes you have to be a little careful of that. And if I want to check what the property of an account is, in this case here I have depreciation. I don't have to be on a number per se, but I do have to be on a row. I click on edit account and it will say here's what my properties are. So computers are dumb. It needs to have the property specifically delineated so that in the income models it knows what's going on, and that's how we do that. Now earlier, I'm going to edit these financial statements in Excel is what I'm going to do, and a box is going to come up and it's going to say do not use Excel to edit the financial statement worksheets. Earlier I told you about the pre-displays that we use. And I want to show you that on the financial statements and on these different schedules that it's copying information to, you can tell that there's a lot of information in the first 10 rows and the first 10 columns. If that's the case, you can use the row headers to hide stuff. There's no problem with that. But you don't want to insert any rows and you don't want to insert any columns in those particular schedules because, like I said, we are inserting accounts and we are inserting rows, and the other 14 schedules that are supposed to look like this one won't. So I'm going to click on return here, come back into the product, and I'm going to look at normalizing. To normalize our financial statements, you click on a particular year, and that's what the navigator is going to do for you, and you click on a particular row, and it doesn't necessarily have to be on the numbers. But this yellow column out here is locked up. If I type in a 3 here, it's going to say I'm protected. And it's the same sort of situation. And that is that there's a lot of schedules that are affected by the normalizations, and so we need to delineate exactly what those are. So we have a taskbar button up on top here that says Edit Adjustments. A box opens up. Now I can put in a notation, whatever that might be, A1, the adjustment. There were a lot of returns that weren't included in the revenue line, let's say. And then I can notate it. And if I want to apply the adjustment to all the years, there's a box here. A lot of people out there say I have officers' compensation. It's overstated by $25,000 or $50,000 every year, so they want to apply it to all the years. You can do that. If you don't like the order of the A1, you can come back into the Edit Adjustments box and change that order if you want. But when I press OK, what's going on in the background is that it's going to put an informational number inside of here. And so the formula says 1345, minus the 50,000 comes up to 1295. But also it's delineating exactly what that was, because down at the bottom there's now a note that says returns are not included. So I know why I made that particular adjustment. And on other schedules, that same note's going to come through. I need to make a helpful tip here. When you're on the tax line and I click on Edit Adjustments, I can use it two ways. I can use a manual adjustment or I can use the tax table. Now, if you set up the tax table, there's only one tax line, so you have to make sure both your state and your federal are included in that. But you can choose how you want that to be by going into this screen here on the tax line and choosing Edit Adjustments. That's how you normalize the financial statements. Let me give you a hint about how we go forward with this information. We take the adjustments and we summarize those, and that's what this summary information is about. On the summary information, it summarizes the detailed financial statements, and goes into the income models. So if you're looking for the bridge between the income statement and the schedule of the benefit stream and the income methods, this is the bridge, the summary income statements. The other thing that I want to talk to you about on the financial statements is that you can come over here to the assumptions and choose how you want to apply certain things. If you have a service company and you don't have cost of goods sold or inventory, it will hide those rows. Let's say that you have a partnership or an S corporation. You can say on the historic statements, don't show me any tax lines, but I'm going to tax affect those. So please show those in the adjusted statements. And between those two things there, you can probably get to where you want to be as far as how you want to handle the taxes on certain information. Adjusted balance sheets. Sometimes practitioners only want to show the most recent one. If that's the case, then realize that some of your financial analysis and benchmarking is only going to be able to be done on the most recent year. You have to input all the financial periods if you want to do benchmarking on all of the years. The next item that I want to talk about, and here's a helpful tip. When you go through the first time, or one of the first times, is start at the top of the navigator and work your way down to the bottom and try to figure out what each schedule is used for. So we're underneath financial analysis, and you can come over here and you can say, oh, here's the compound annual growth for the income statement. And you can say, oh, that's trying to help me to see what the trends are of a particular account. But you may get down here to say, I'm trying to do a custom benchmarking, and when I get down into the custom area, what's going on here? And it's basically saying, hey, if I'm using a different source besides RMA or IRS, I have a chance to put that in. You probably won't use every schedule on every engagement. And that's the important point I'm trying to make, is that if you know which schedules are there, then you can go to them and use them, but you don't have to use every single one of them. So I want to talk about how to download information. In this case here, we're talking about the RMA data. So we've calculated what the common size balance sheet is automatically based off of our input. Now we need to benchmark that against a particular peer group, a competitor group. Now I want to go into our databases workspace, and so I'm going to click the icon for databases. On the left-hand side, we have the navigator concept. I'm going to choose RMA. The navigator concept allows us to choose which database we want to download into our product, and these are the only data sets that will download into the system. You can use vswebapp.com or keyvaluedata.com if you want to get into some of the other databases that are available as well. The databases have a three-step process. One is you do your search, two, you can review the information, and then three, you can copy that to the analysis or to an Excel sheet. The reason I go through the databases workspace icon is because I get this Excel sheet to show up. I'm the kind of guy that likes to go out there and say, here was the information on this day that this database gave to me. And so I will save that Excel sheet off in my client file just to make sure that I know what I had that was downloaded. Now, in most cases, you're going to be able to choose a single year or a multi-year to show you the full capabilities of the product. I chose multi-year. 2014 would be my anchor. I want to show 5 periods of data. And then I'm going to come over here as soon as that picks the right piece. I'm going to say from search. I like certified public accounting firms. So if I type in the word certified, I can press search. If I chose from list, I would have to know the NAICS code, and I could pick up the list of the NAICS code, and it would just be in numerical order there. In this case here, I'm going to choose sales. I'm going to choose the national, and I'm going to choose 1 to 3 million. 1 to 3 million in sales is a small local firm, somewhere between, 3 and 6 partners, somewhere in that range. And I'm not really wanting to talk about RMA today, but I'm going to give you a couple of hints about it. And if you want to know more, please contact ValuSource. But once I know that information exists in the balance sheet and the ratios, my next step would be to click on the Excel button here. I will generate an Excel sheet that have these 3 tabs and the information on those tabs out there. And then my next step is going to click on the analysis. When I click on the analysis, it's going to take the information that's inside of that database. It's going to say download is complete. I press OK. And now we go and say, what happened here? It's OK. Well, we have to manually come back into the analysis sheet. And my information is now in place. I can also choose this Get RMA Data. When I choose this button here, I will go out to the database's working space. I'll be able to choose it will automatically select RMA for me, but I won't see that Excel. I won't see that Excel sheet option. And it should bring me back to this schedule here when I get done with the download. And that's the difference between the button on top and using the database's workspace icon. Now what happened here is that we downloaded all of that information into this workbook. Back towards the end of it, underlying all of this, it says RMA_download, and we type in all of the information automatically, and then we map to it with these blue font cells. So if you have RMA data from some other source, let's say you go to RMA directly, let's say you get a sample file inside of a case study, you can type that information in here. Now what's interesting about the Valuation Edition is that it has p-tile rankings. This is the percentile rankings. And what this is saying here is that in this particular case, there's $229,000 in cash. That represents 15% of assets. Now, RMA says the average is 19%. So I'm below the average, but guess what? I'm in the 64th percentile. So what that is suggesting to me is that 64% of the CPA firms in that category, 1 to 3 million national, have less cash than I do. And that's kind of an interesting thing. What it says is the average is much higher than the median. And so there are a lot of firms out there with some very high cash in place. But 36% of the balances, don't have that high. So I might have a stronger firm in place even though my average is different. Like I said, I'm not trying to demonstrate RMA, but that is the strength of the Valuation Edition. Now let's say you didn't purchase the Valuation Edition. I can come up to my assumptions and I can say, wait a minute, I don't want to see those Valuation Edition p-tiles. I don't want to see the IRS data because I'm not using that, and I'm not using the custom comparison, so I can turn those off. When I come back into my RMA balances, all I'm going to see are the averages here, and when I'm down in the ratio areas, I'm going to see the upper, median, and lower, and I can certainly uncheck those as well. So by using the assumptions, I can get a better presentation of what I want to see and how it wants to look. The next step is to actually look at somebody using the program. And so I want to say, here's how I would go through and use a single period model. The first step is on the navigator, I choose where I want to be. And I realize that there are schedules up on top here. I'm probably going to come back to these and say, these schedules up on top are where I want to have information flow through to this. But in this case here, capitalization of earnings, capitalization of cash flow, I choose the assumptions. Now it's set here for EBIT. I'm typically an after-tax cash flow kind of guy. I'm going to choose an adjusted base. This here is debt-free or invested capital. If you're trying to use an weighted average cost of capital, you would check mark that. Our program does allow the iteration of that, so you get the percentage of equity and the percentage of debt that you're calculating. I'm not a big whack kind of guy, so I'm going to leave that blank. If I can't read all of my schedules, I can pull the column for this particular grid open, and I can see more of what's down here. I have 4 choices for my build-up. Build-up capitalization rate is one I like to use. A lot of people like to use CAPM and use that process there. We have the factors inside of here, but I haven't seen the factors really talked about or used over the last 12 years. Back in the early 2000s, factors were a big deal. Then I get to choose SBBI. If I'm using an older engagement, something before 2012, I'd probably choose SBBI. Something after that point in time, the Duff and Phelps have published their valuation guide to cost of capital, and they have the decile information inside of there. If I like the Duff and Phelps risk premium report, that's what this cost of capital is. Excess of CAPM is the recommendation, but we do have the choice of arithmetic mean. And here again, I get to choose my slice of data. I'm a 10th percentile kind of guy, so that's the one I would choose, but some people like to choose 10B, some people like to choose 10Z. Capitalize against year 0 or year 1. The reason this is in here is because in some jurisdictions, the litigation area says you can't use information past the date of either the date of trial, date of divorce, date of separation, whatever that date is, and that's typically going to be the valuation date. I like to choose year 1 on that, but like I say, because there is the litigation thing out there, we inserted this year 0 so that you could say, okay, here's my benefit stream at this point in time, and it takes the discount rate, divides it by the growth rate, and comes up to a discount rate that's appropriate for that particular time period. The industry risk premium, I'm not a big IRP kind of guy, but if you are, you can choose to input that into your system. Mid-year convention, we have calculations inside of here that will use a mid-year convention. I'm not a mid-year convention kind of guy, so I leave that uncheckmarked. Now I want to show you something really important here. These are the premiums and discounts that you can apply to a particular engagement. And I want you to know that it's possible to apply a control premium and a marketability discount at the same time. The software or the background Excel sheet will calculate both of those values. But you need to be aware as an expert that you're probably not ever going to have a control premium and a marketability discount at the same time. It would be a very, very rare circumstance, specific fact pattern that would allow that. So I'm trying to say that you can set this up to give you bad values. This is not replacing expertise. This is trying to make things more productive, more efficient, automate practices, give you a little bit of quality control over what it is you're trying to accomplish. So I'm going to change this to minority interest discount, and I'm going to change this to marketability discount, which is probably more likely to happen in real life. I have excess and non-operating assets that I can apply here. I would probably apply both of those in this particular fact pattern that I'm thinking of, and I would choose those. The next step is to go to the benefit stream. Now inside the benefit stream typically is a weighted average, and typically people choose 5, 4, 3, 2, 1, although it depends on the fact pattern. You know, you can choose whatever you want. If you want a straight arithmetic average, you would input 1s across here. And this is where going back to the beginning and saying these are white cells, white background cells. So we have no idea how you want to weight these things. So you would have to type that information in. It then calculates the weighted average for the ongoing earning power, and it will calculate the weighted average for the depreciation number. Now, like I say, if I was doing an engagement, I would have some idea what this depreciation and non-cash expense items are. If those are not matching what I think the income statement was saying, then I have to go back to the summary income statement and bring that down. So you have to check your numbers to make sure that things are classified properly. Creates a taxable base. And this is for the state taxes. So in Colorado, where I live, we have an add back over the top of the federal taxes of about 5%. Sometimes it's a little higher, and then it calculates a value, and then it's going to say what's the federal taxes on that particular number there. Up on top, I have a tax table. I can click on it, and as I scroll down, I will see the tax table in place. If I don't want to see how those taxes are calculated, I can hide that tax table and it comes back up to the top. Then it adds the depreciation back on, and we have our working cap, or we have our balance sheet cash flows that we have to consider. If you don't have reinvestment into the business is going to go out of business, and so you need to have some idea of what your working capital and capital expenditure pieces are. Let's say that this here is a mom and pop shop that does not have any debt. Typical situation out there, very, very common. And so I may not want to be talking about the long-term debt requirements when I'm talking about my benefit stream. I may talk about that up in the company description of my report. So what I would do in this case here is I would come out to Excel, and I want to show you two things out here. The first thing is that up in the top, there's not anything up here in the first 10 rows, and there's not anything over here in the last or the first 10 columns There's always going to be a little bit over here in the corner, and that's okay. And there may be one or two things over here where we're doing some intermediate calculations. That's okay too. In this case here, if I wanted to insert columns or insert rows, I could absolutely do that. Let's say that I wanted to come down here off of the benefit stream and insert some regression analysis, some sort of R-squared number or covariance. I could do that. In fact, it's already here. I just have to turn that on and put ones inside of there. But what I really want to show you is that I don't want to talk about long-term debt requirements because this company here has no debt, has no service needs. So if I put a 0 on that row and I come back into the program, my benefit stream now starts to look more selective. In other words, I'm talking about working capital, capital expenditures, that's my reinvestment off of the cash flows, and I'm going to have a calculated amount, and then it's going to round that to the nearest hundreds. Let's say I want to round that to the nearest thousands. Okay, it's a blue font cell, so I can edit this. So maybe I want to change that -2 to a -3. And now it'll round it off to the thousands. So I can do that, or I can type over the top of that as well. So we have this concept in there of calculating things up to a point, and then when we have a major assumption or major break, we force that to be a new value. The next step is to do the capitalization rate. Inside the capitalization rate here, I can click on my Get Duff and Phelps decile data. I can come over here to my databases working space and download that information. Obviously, we just typed in some numbers here, 3, 4, 5. 7.5% for the company-specific risk. This is undiversifiable information. There's a schedule that says, let me bring that into place. Now, this here's built off of stuff that was fairly long ago, and so they were assigning a percentage for each individual item. A lot of people don't like to do that. A lot of people want to say, let me put in 7.5% here. Well, that's good. These are all the characteristics that drive that 7.5%. For me, to make this schedule a little more better, I'm not sure that's good grammar, to make this schedule better and more easily understood, what I would probably do is I want to insert a shape, and I want to insert the bracket. So I put that there. I'm going to want it a little thicker, and I may put my 7.5% down here, delete that out, and now when I come back into the product, when I print this schedule for using the company specific risk, I see that all of those different characteristics are matching up to my 7.5%. And that 7.5% is going to go through to all the different income methods, multi-stage, summary, detailed, all of those. So when I come back to my cap rate, comes into here, here's the long-term growth rate. Well, guess what? That's coming from the long-term sustainable growth schedule, and I can click on that as well, or I can just type over the top. Here again, calculates the indicated value, and then it says, okay, here's what I'm going to choose to use. And however you want to do that. Maybe you want to do 15.5, maybe you want to do 15.55. Let's say this was, 2.51%. Now all of a sudden it's rounded off to the thousands place over there. And maybe that's too fine for you, so you want to round that back to 15. The next step is the indicated value. Here's where that year one comes into place. So it takes the benefit stream, and it takes the growth rate that I chose. And like I say, we have a good idea that the growth rate is going to be the same one you have to use in the cap rate schedule, so that's in black font. You can't change that. You could go out to native Excel and overwrite it if you wanted. Benefit stream for year one, cap rate for year one, divides it, and comes up with an indicated value. It then applies the discount for minority interest. It then applies the discount for marketability interest and comes up to an indicated value. But wait, we have excess assets, and we apply both of those discounts to it. And so we're only going to add back that amount there, and we come up to a calculated amount of that. And then it rounds it off to the thousands place and says, okay, 1.799. The other thing our program does is that it will allow you to do a sensitivity schedule. And you can do it with or without premiums and discounts. So what I probably do is say before I do my premiums and discounts, I look at the value and see what's driving this. The growth rate is up on top. If I'm off of my growth rate by a percent or 1.5%, I can see how that affects my value. Likewise over here on the discount rate. If my discount rate is off a few percentage points, what does that do to the value? And I can see what's driving that. That value then tracks down to the conclusion of value. Inside the conclusion of value are all of the different ways that we can calculate values. These are the different methods that are available to us. Now, you're not going to use every single method on every engagement, but you may use the method over the course of a career. I want to talk a little bit about the different methods here. Cap of earnings model is a single period Gordon growth model. The multi-stage growth is a DCF model where you're taking the benefit stream and growing it at different rates into the future. So let's say that management gives you a forecast. You could type in that forecast into there. The summary DCF method is where you say, I'm going to grow revenue at the inflation rate or growth rate. And then everything else gets filtered by the common size income statement and the common size balance sheet. And it generates a benefit stream based off of those forecasted financials based off of common size. The detailed projection is where you can go in and up to 10 years forecast row by row using different methodologies, say a growth rate, say a percentage of sales, say a regression analysis, and you can make each individual item forecasted. And we'll go back and talk about that in a moment. The excess earnings method obviously is one of the methods out there. In Colorado, we're not required, but it is definitely mentioned so that we have to use it in divorce cases. And so I would probably, say, here's my excess earnings methodology and put that into place. Let me go back to the DCF model here and spend a moment. And you're welcome to fast forward over the top of this if you're not ever going to use this particular methodology. But the way it works is that you have an adjustment here. So let's say that I don't like my historic income statement, or it's a 6-month period, or I want to, let's say I want to just say, let me, make this 1880. And then I can subtract out these other items, and I can have one cost of goods sold line. So I could do a couple of things with it here. And one more. But this creates the base. There we go. So now I have 188 million, and I can forecast this particular item into the future. But the base is 0. And so when I forecast each one of those lines, I can go in there and say, percentage growth 0 times whatever, will make zeros across here. But when I want to forecast this line, there is a projections button up on top. Here again, the projections have a lot of different working parts in the background. It will bring up a dialog box, and I can choose the different ways that I want to forecast this. Let's say it's a growth percentage. Historically, it'll bring this information in if it exists. In this case here, I'm forecasting a line that did not exist before, so there's no information to calculate it from. I can put in my growth percentage. This is old style grid work, so I have to put in 0.04 for 4%, and I can use the copy down. And then when I press OK, it's going to forecast my 188 million across here at 4%. As I work my way out to the right-hand side of the page, it says, what method did I use? Growth percentage, and here's the argument for that particular methodology. So let me come back up here real quick and let me forecast this, using a growth percentage. It doesn't matter what it is because it's going to make that a 0. And this one as well. Copy down, press OK, and one more row. And so what I'm doing here is I'm forecasting the cost of goods sold area of my income statement on a row by row, account by account basis, but cost of goods sold is not a driver of this business, and so I'm just going to forecast it into one row here, and that's how that looks when we go forward. And then from there, you can look at the different schedules underneath here, and it will apply the projections and tell me what's going on. If I'm losing cash, making cash, does it seem reasonable or not? But that's the big deal about the detailed DCF area, is understanding there's a projection buttons up on top. Conclusions of value. So in the conclusions of value area, these are the different methods that I can calculate and work on. Now I want to talk about the weight column out here. If I'm a choose one kind of person, then I'm going to set this up to be zeros across here instead of weighting it. If I believe that it's equally likely to happen between one value and another value, these are pretty far apart, but let's say that I wanted to say it's equally likely to be this market method and equally likely to be this capitalization earnings method, so I'm going to weight those together and it will calculate the value in between. However you want to do that is fine, but that's the difference between choose one and weighting. Now at this point here, we need to set up the report writer so that the report writer is able to do what it needs to do. So our report writer has three pieces of functions that we add to it. And the first piece of functionality is that there are some standard templates that we've created that bring standardized text, boilerplate text. Here's one way to describe a particular way of doing things. And you can bring that information forward. So our template has 300 pages of this. But like I said, in an engagement, you're probably not going to use every method. So the way you handle that is you put 3s by the methods you don't want to discuss. Now you can tell that my asset methods here, I should probably have a 2 on one of those. So I'm going to put 2 by that one. I'm going to use the cap of earnings model, but I'm probably not going to use any DCF models. Like I said, typically we use the excess earnings method in Colorado, but most states do not, so you would put a 3 by that. Now let's say that I wanted to use the BizComps model or the IBA model. I could put 1s by those, and then I put 3s by the ones that I'm not going to talk about or use. There's a button up on top that says Expand Condense. When I click on the Expand Condense, I'm going to get the 3 methods that show up here. So in the report, it's going to talk about a cap of earnings model, it's going to talk about a market method, and it's going to reject an asset method. What I need to do next is go back to the methods that I'm going to bring forward. Now the numbers don't have to be correct yet, but I do have to have my assumptions set up. So if I go back to the appraisal method, and I'm looking for my cap of earnings model here, and I press on assumptions, I need to know whether I'm going to talk about SBBI, whether I'm going to talk about risk premium reports, or whether I'm going to talk about the decile information from Duff and Phelps. Am I talking about excess of CAPM information or arithmetic mean? And based off of those choices, it will bring forward paragraphs when I create the report. That's probably the most important tip about creating the very first report. Once you create a report, you can't go back and bring forward new pieces of optional content. You actually have to go out there and make a new report and copy that in for that. So set up your report first, and then it's a real simple process. You go report new, report, and it'll give you a choice of your templates, and you create that. Now I've already created one, and you can tell that I selected the icon for report, which means I want to bring up the working space for the report. I have a report out here, and I'm going to bring that up. Now sometimes your report will look like this, and it'll come over here and you'll be missing information. If that's the case, you want to click on the V over here. Now I've moved my start bar over to the right hand side. That's a little bit hinky for most people. It's down here on the bottom usually. So you would click the V in the start bar, and that will bring open this window here. And now is when you want to use your a range full. I call it a snap to button because it snaps the navigator in place and it snaps the reward report into the topmost position. So sometimes I'm out there doing research on the internet, or I'm using my email program, and it gets out of sync and it looks confusing because I have a window over the top of this, and that's what that snap to button is for. Is it just snaps everything to the top. So it's gone out there and it's brought forward all of the boilerplate language that can be brought forward. Keep in mind that we're only about 70% of the way there. You still have a lot of work to do in talking about the specific company fact pattern and tying the facts of the case to the proxies of data that you're using. And so you still have to make those conditions happen inside of the report. The other thing that we do is we have links. These little blue chevrons here are the links. And let me show you what happens out here. So we have child's clothing store. If information changes in the analysis sheet, and in this case here, I'm going to change this to ABC Plumbing. And my short name over here, I would probably change to ABC. And then when I go back to my report working space, I'm saying, wait a minute, my report isn't reflecting that change yet. There's an icon up on top where it says Update Commands. I click on that, and it's going to go out, and every one of these links with the little blue fonts in it is going to get updated. And it goes through every single one of them to do that. And in a moment here, we should see, and it's always going to bring me back to the head of the document. That's just how Microsoft Word works. But you can tell that ABC Plumbing now has been replaced. So any place there was a link that linked back to the company name or to the company short name, it now got updated. That's pretty powerful. That's a very powerful situation here. You can do it in Microsoft Excel and Word, but it's not as easy to do as it is here. The other thing that you can do is that you can use the navigator. So if I click on a particular item here, I can use the navigator and I can go, searching for all commands, search for the next one, and now it's on the 1, 2, 3, 4, 5. I can go backwards. If I'm on a particular command, I can use the up and down arrow. So let's put it on valuation date. Let me go back over here to the profile, the valuation date. I hid the valuation date. So it's June 30th. So let's say it's December 31st, 2014. And when I come back to the working space analysis, if I want to update just that single cell, I click in the link, I use the up and down button, or the up and down bar. It brings that command into place here, and I get to choose what format I want the date to come over as. I press apply, and it will change just that link. So my working process is as I'm doing rough cuts and I'm trying to get information into the document, I'm going to update everything all at once. As I start to work into my final processes, I'm probably going to update a single link at a time because I want to make sure that all the links that I did before and had checked are not being changed on me. And so that's how I work through the report. The other thing that we need to do here, and you notice that I came up here and I brought focus over here. Here's how I create a link. So I'm going to go back to the appraisal method. I'm going to go to my cap of earnings benefit stream. And let's say that I want to talk about this, $302,000. So I bring focus to that particular cell. Up on top, there is a copy link button. I click on the copy link button. I go back to my report writer. Wherever my cursor is flashing at, could be in the middle of a paragraph if I wanted. I click on the notebook or the clipboard and the plus sign, and it will paste a link in there with that value. Now this is Microsoft Word, and when I click on a single link, a single cell, it's going to pick up the formatting of the items above it or near it. So if it's in the middle of a paragraph, it's going to pick up that. Now I can also bring across a schedule. I do the same thing, except for now I am going to bring across, this information here. I just want to talk about my working capital requirements, or I could highlight the whole schedule. But whatever range I highlight, I click on the copy link button. I go back to my working space for the report writer. Wherever I have focus, I press the paste, and for intermediate people, you can paste it as a word table. But generally, wherever I have focus, I'm going to click on the clipboard and the plus sign and paste my item in here. Now, when we do that, we're pasting it as a picture. So I always format my pictures, and you can tell that I got, changes here around. So I can make this picture do anything I want. Backwards, smaller, bigger, but it's a picture. So when you paste a range inside of here, you need to be aware that you're usually pasting a picture unless you choose that word table function. You need to understand how to format pictures inside of Microsoft Word. Sometimes our pictures will go off the end of the page and they need to be resized. Sometimes you need to set up how you want your text to surround that particular link, and that sort of information here. But that's what you do with the copy a schedule into your report, is that it's copying it as a paste. Now that's a pretty powerful feature too. So instead of having to have a whole bunch of exhibits at the back of your report, you can cut out or cull the important information and put it where you're talking about it and create a picture inside of the document. One more thing I need to talk about is the workbooks working space. Now I have a workbook out here that I've created some information in, and when I load it up inside of the workbook space, you can go workbooks open. I'm not editing the workbook out here, I'm just bringing it into place. I can copy this table, or I can copy just like I did before, and I create the copy link, go back to the report space. Wherever I have focus blinking, I paste it, and it brings in my table. So what I'm trying to show here is let's say that I'm doing something outside of where the analysis carries me. There are 3 custom worksheets inside of, down here at the bottom, there's 3 custom worksheets where you can go in and create an analysis if you want. But a lot of times we have special worksheets that we use for, say, a market method, or our compensation analysis, depreciation analysis, working capital analysis, things that may not be inside of the analysis file. And when you do that, you can get it into the report by using the Workbooks tab. Like I say, you edit it in Excel, then you copy it or you open it into the Workbooks tab, you copy what information you want into the report, and this link now updates just like all the other links. Now, all of this said, we have to be very cognizant that this is Microsoft Word. And inside of Microsoft Word, we use a lot of functionality. We don't use it like a typewriter, so we don't format each character and say, here's what we want to do. We actually use styles inside of Word. So if I put my cursor on this particular style here, I drop my style box open, you can see that this here command, RW command, is the style of that. So I want to right click on the RW command, I want to click on modify, I go into format, font, and I change that to a hidden style. And when I do that and press OK on these, my chevrons disappear. So you need to know how to use Microsoft styles. Go out to Google, go out to YouTube, understand how it works. Our table of contents is set up off of heading 1s and heading 2s. Our footers are using fields with the heading 1 style inside of it. Our our page numbers inside of the footers are using fields where we're saying here, take the page number, subtract this out. You can do all of that inside of Microsoft Word. But understand styles. If you copy like the NER, National Economic Report, into here, you need to make sure that you keep the styles of the target document, not the source document. You don't want to be changing the formatting of your heading 1s to something else. So it seems kind of hard to me to come out here and choose that RW command and hide those every time. So we've made it easier. We go to View, and we turn to commands. Now I'm out of sync here. So I have the blue font chevrons here. I go to view and I turn the blue font chevrons off. And now I have a Word document that I can actually print and go forward with. We have yellow text inside of here that's called helper text. Same deal. It is a word style that we set to hidden, that we set to visible. And if you want to unhide it, you uncheck mark the helper text and you can get rid of that as well. If you don't want to see the helper text at all, you can come out here to tools and say remove helper text and get rid of that information. And so let me check my list here and make sure that I've talked about all the stuff that I need. Oh, there's one more thing that I need to talk about, and that is the section breaks. So as I page down here and I'm looking for, well, like I said, on the table of contents, if I right click on the table of contents and I press update, a little box will come up. Second time, it says, do you want to update the entire table or just the numbers? That's all based off of styles. But a lot of times people don't know you should right click on that or use the F9 key and put that into place. So I'm trying to find a section break. That's where I was headed to. You can tell, if I make this a little smaller here, that I'm looking at portrait, and then I go from portrait to landscape. The reason that happens is because there's a section break there. You can see that there's a section break here, and this is that helper text I was talking about before. I turned it off so you can't see it, but I can see the section break. And then when I go to the next part of the section break, it will allow me to turn this portrait or landscape. So I go to page layout, change the orientation to portrait, and now it sets up a portrait. We turned it landscape because balance sheets can go up to 10 years, and we wanted to have in our standard templates the ability to show all 10 of those years. But that's how section breaks are. You need to understand how section breaks work. It's also going to affect your page numbering down here. That's Microsoft Word technology. Go out to Google, go out to YouTube, look for section breaks inside of Microsoft Word. But if you understand section breaks, how to format pictures, and styles, you should be able to use our product with very little trouble. We talked about how the navigator works inside of the Word document, how you can search for ranges, charts, errors. So if I want to search for ranges, I just click on this and it'll take me to the next range. The other tip I should tell you is that the Microsoft Word ribbons and the Excel ribbons are not something you should take lightly. A lot of times we disable some of that stuff. So be careful about printing or saving from the Microsoft Word ribbons. You should always do it from our, report print. Now you can take this document out of the framework at this point. Let me make sure I turned off my commands and helper text. Okay. And now I can take this out and give it to an assistant or junior and say, here, finish up my reporting process. Here's an example of where the picture goes off the side of the page. On the analysis, the navigator on the left-hand side, working pane on the right-hand side. Again, try not to use too much of the edit in Excel piece. If you want to edit in Excel, use the green X, edit in native Excel, and you can do that fairly easily. The assumptions are nothing more than mouse clicks. You can make those bigger or less. You can edit in native Excel, except for the financial statements and the detailed DCF projections dialog box and the normalization of the financial statements box. I hope at this point that you've learned an awful lot about how our product works. There is an intermediate level where you can insert your own sheets or insert your own charts and also create a template out of your own reports. That would be the next step to get to, but work through a project or two with this information, and I think it'll be very helpful.